Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies, specifically about Palantir's long-term bull case and why it could be a fantastic buy right now, while many growth stocks and many innovation stocks are pulling back right now. Then we're going to compare Palantir to Snowflake, because these are both data analytics companies, and then finally we're going to go over the projections for Palantir's revenues, earnings, and future potential for their fundamentals, as well as some technicals. So if you want more videos on Palantir Technologies, remember to smash the like button right now, comment your thoughts down below about PLTR, subscribe if you are new, and now let's get right into today's story. So we're going to start off with Palantir, and of course the ticker symbol is PLTR. Currently the stock is trading at around $14.56. The low-end price target by analysts is $15. The average price consensus among analysts is $21.83, and the high-end price prediction for the beginning of 2023 is $25.30. Palantir Technologies, if you didn't know, is a big data and analytics company that works with both government agencies as well as commercial clients, and right now the stock price is hovering at around $14.56, despite very positive developments that we've gotten from Palantir over the last few months. When Palantir initially DPO'd on the public stock market, they tripled in value, which was absolutely amazing for investors that got in early into this company. But if you didn't get in on Palantir's DPO, don't worry, because right now could be a fantastic buying opportunity for you to experience very long-term growth from Palantir Technologies. Now, I also want to add that Palantir's recent stock performance does not reflect the performance of the underlying business or company. The stock has been disconnected from the fundamentals of the company, and this is why we see the Palantir stock price falling, which makes it a fantastic buy. Palantir has done a fantastic job growing their commercial segment, which I have talked about many times because I am very passionate about their commercial segment rather than their government segment, which has been scaling at almost a 30% compounding annual growth rate for acquiring new customers, and it has generated upwards of $450 million worth of sales for Palantir Technologies, which is absolutely amazing. Palantir is also consistently signing new contracts, agreements, partnerships, or joint ventures with many other well-named commercial companies such as Merck to solve the semiconductor and chip shortage problem, Kinder Morgan, and DuPont Therapeutics. The demand for Palantir software is ever increasing, and we also have a big data compounding annual growth rate increase of around 14% year over year, so at minimum, Palantir should grow at a compounding annual growth rate of around 14%. Now, we have received some bearish news from Palantir because apparently investors are not satisfied with the growth in their government sector. However, I am not too worried about this because I am more focused on their commercial side, not their government sector. I view their government contracts as very safe revenues, and they also have some backlog of commercial and government work that is over $3.2 billion, which is fantastic news. So even though the growth in their government sector has slowed from 70% down to 34%, the sector and segment is still growing within Palantir. Palantir is still consistently landing new government contracts, such as their Army Vantage program, their Space System Command contract, and the National Institutes of Health. Another reason to be extremely bullish about Palantir Technologies is that they are infiltrating the cryptocurrency market. Palantir's technology is already very useful for both health companies, fintech companies, financial institutions, as well as cryptocurrency exchanges, and this is due to their ever-evolving Foundry platform. So I personally think that Palantir Technologies could steal a large chunk of the cryptocurrency market, and a lot of other companies really are not trying to penetrate this market, such as Palantir right now, which gives Palantir a huge first mover advantage in the space. So by Palantir continuously scaling their commercial clients as well as their commercial segment on top of decent government revenue while infiltrating a new market such as cryptocurrencies, I think the Palantir stock and business as a whole could experience massive growth ahead of them, so I'm very bullish on it. But how does Palantir compare to another data analytics company such as Snowflake? Currently, Snowflake trades at $292 per share. The ticker symbol is SNOW. The low-end price target by analysts is $250. The high-end price target from analysts is $575, and the average price consensus gives us a fantastic upside opportunity to reach all the way up to $383 per share, according to analysts. This company allows enterprises to derive valuable insights from the data that they generate. This can allow organizations to make better and more informed decisions across their entire company that could critically impact their business overall, but with the insights from their data data-derived decisions, the business can be confident that they are making the right decisions based on their customers or their overall goals. Both Snowflake and Palantir have gained a lot of traction and popularity throughout Wall Street and retail investors, but during this very heavy tech sell-off that we're experiencing right now due to the Federal Reserve increasing interest rates in March and 2 to 3 other times throughout the year on top of rising bond rates, we have seen both of these stocks pull back. So which of these stocks is going to be a better long-term play for our overall money if we had to choose between them? These companies are somewhat similar because both of these companies create software tools and platforms that allow organizations to gain insights from the data that they already generate. And data is becoming more valuable. Some analysts even think that data is going to be referred to as the new oil because it's so valuable for various organizations and the decisions that they make. So if you don't have a good data analytics platform to interpret this data, your organization could fall behind the 8 ball. Snowflake overall is a data warehouse as a service company, and it went public in September of 2020 in one of the largest software initial public offerings ever. It has also received fantastic growth, and we can see this from several key performance indicators, such as Snowflake obtaining around 5,400 customers, and this is reflected very positively on their net revenue retention, which has increased around 173%. So this is absolutely fantastic news. Palantir, on the other hand, is not experiencing this same triple-digit revenue growth rate such as Snowflake has. However, Palantir is doing very good respectively on their own because Palantir reported around $392 million worth of revenues just in the third quarter of 2021. But for Palantir's full 2021 revenue growth rate, it is going to scale to around 40% to over $1 billion in total, so that is so good to see from Palantir Technologies. Now, despite Snowflake's very impressive revenue growth rates and the amount of customers that they have, Snowflake is also paying a very hefty price for the customers that they did gain. Snowflake spent over $500 million on their sales and marketing costs, which represents 65% of their total revenues. So more than half of their revenues are just going to expenses for their sales and marketing. For the first 9 months of 2021, Snowflake generated around $835.6 million of revenue. However, the company spent over $1 billion of that in operating expenses. So although they are scaling their revenues very nicely, they have very high expenses for their operations. Palantir has a different model than to commercialize themselves and to spend very high amounts of money on sales and marketing. They mainly acquire other companies by giving that company a free trial of their services, and if they like the service, then Palantir acquires them as a customer. They want to expand that customer to buy more of their products, and throughout time, the networking and relationship between Palantir and that company is set to increase as time goes on, and they have done a fantastic job about this for the US government. Palantir's strategy also seems to be working because they are saving loads of money on their sales and marketing expenses, and this has also increased their average revenue per customer and their overall margins by around 57%. Palantir also has very impressive free cash flows and operating cash flows of around $240.4 million, which is a fantastic increase compared to their first 9 months of 2020, where they were negative $278.3 million. So Palantir is improving at a huge clip. But the metric that I want to highlight between these two companies is going to be their RPO, which is the remaining performance obligations. Snowflake's RPO grew 94% year over year, up to $1.8 billion. On the other hand, Palantir's RPO increased to $321.6 million around the same time period to $873.9 million. And although Snowflake has a larger RPO of $1.8 billion, I'm actually going to side with Palantir because Palantir has better momentum and is scaling their RPO much quicker at a rate of around 170% year over year growth. So this is a key indicator on the momentum behind the business, and right now it looks like Palantir has much more momentum behind them. This is why I concluded that Palantir's strategy for their sales and their overall platforms to acquire new business is going to be much more successful long term, especially for their own bottom line compared to another company such as Snowflake. Palantir is also trading at a huge discount because it is near its 52-week lows. However, its fundamentals of the underlying company are still extremely strong, strong, which is why I think it's a good time to buy Palantir Technologies right now, and I am not alone because many other people would agree with me on that. But I want to hear your comments down below. Remember to smash the like button before we get into this last prospect here, and this is where I want to highlight their future growth projections. Here we have a fantastic visual representation of how Palantir plans to scale their revenues, their earnings, their free cash flows, and their cash flows from operations. So these two segments are going to be very tightly bonded here, and you can see that they overlap very well into the future. And we have just entered 2022, so I'm going to put a line right here just so we know where we're at. From these forecasts from Simply Wall Street, we can see that their revenues are anticipated to continuously scale up as time goes on, and that is fantastic news. We can also see that their cash flows from operations as well as their free cash flows are consistently increasing as well, just not as much as their overall revenues, but however, this is still a very positive slope. Lastly, we also see a good amount of increase from their earnings, which is again what we want to see. We want to invest into profitable companies. However, for growth companies such as Palantir, the point of them is to get in early while they are not profitable, so they scale into a company that is extremely profitable, and we can see how they planned to do that. So if I put a line here for 2023, we can see we also have a good amount of positive sloping here to 2023, which means that their earnings are going to increase as well. I think Palantir could easily become a fully profitable company in between 2024 to 2025, and this also reflects in their future forecasts by their management. We also have to make sure that Palantir's revenues are scaling at around a rate of 30% year over year, all the way up until 2025, so that is more fantastic news for the company. And this is going to reflect very positively on the overall stock price for PLTR. However, the current stock price of PLTR is very low right now, and it's downtrending due to macroeconomic factors, but the company themselves is still doing very good, and it does not deserve this low stock price right now. But I want to hear your thoughts. Comment your thoughts down below about Palantir Technologies, what your price target is for the PLTR stock, what your strategy is for investing into this company. Remember to smash the like button right now, subscribe if you are new, and I will see you in the next YT video.